Hello guys, welcome back to my YouTube channel. My name is Emmanuel.James.siwale, your mentor, and if you are new to this channel, welcome. Make sure you subscribe if you will find any content of mine interesting and helpful. Okay, so in this video I'm going to be taking you on to this full course. By the way, whatever I teach, it's full course thing, and I do not leave anything behind. Okay, I'm telling you everything, including the psychological part about that particular area of its trading. Okay, so in this video we're going to be looking at how to trade divergence in forex. Okay, so divergence trading is very important in trading because it gives you the potential sells, low risk sells, and low risk buys in whatever pair that you want to trade or see the end trend of that particular pair. Okay, so let's start with the $1 million question of what is divergence trading. Divergence trading is, okay, I want you to get this clear. Divergence trading is a low risk trade scenario used to read the market reversal. Okay, it's a low risk sell or buy of that particular pair that you want to trade. Okay, it gives you the end result of a particular sell in that trend, whether let it be an uptrend or downtrend. If you are in a downtrend, it gives you a low risk buys, meaning you will find a particular buy with low risk. Okay, you will not just execute a buy having high risk buys on that particular pair. Okay, so it's a low risk way of knowing whether you're going to buy or sell in that area that you're touching divergence. Okay, so we have two types of important divergence. We have regular and hidden divergence. Okay, what is regular? So regular divergence is divergence used to read the potential sales or buys of that particular trend. Okay, hidden divergence is as well determined as the trend continuation trade or a reversal. So they are quite similar, but with hidden you will be able to spot some potential trend continuation, but with regular divergence you will spot potential trend end of that particular pair. Okay, so now let's head into the important stuff on how to trade divergence effectively and efficiently. Okay, so when you are trading divergence, you do not just trade it raw. Okay, you need indicators. Okay, and these indicators that we're going to be looking at are the RSI and the stochastic indicator. So we're going to combine divergence with the RSI to know how to buy or sell using the same scenario of this whole thing called divergence trading. Let's head into our chart with divergence trading. So this is gold against dollar, XAU USD. We have our chart. Okay, we have our chart here. So the first thing that you need to know or master when you're dealing with divergence trading, you need to understand what regular and hidden divergence is and how to apply it on a graph. Okay, so we have I'm going to give you an actual, I would have displayed the pictures here to give you a simple way for you to understand this, but nevertheless I'll just draw them out in a term of the particular trend, uptrend, let it be uptrend or downtrend. So we have a clear chart, and I'm going to change the colors. Background, I want everything in white so that I'll have whiteboard. All right, meaning this, that, the last one. Okay, so we have a whiteboard and let's begin. So when you're dealing with regular divergence, you have two area concentrations, the uptrend and downtrend. You don't look at the consolidating part, no, you only look at the uptrend and downtrend. Okay, so let me give you an example starting with the uptrend. Okay, We are starting with the uptrend. We are looking at regular divergence. Okay, regular divergence. I'm going to thicken up my. Okay, we have your uptrend here. The market is moving on the upside. Because of time, I'll just draw about 3 of these. And that. So when you're looking at regular divergence, when the market is in an uptrend and it's making higher highs, okay, when the market is in an uptrend and it's making higher highs, these are higher highs. We have your high and high. It's making higher highs. What do you need to look at? You need to put up your stochastic or RSI indicator. Okay, and how do you do that? You go to the insert option, indicators, oscillators, relative strength index. You make sure everything is on reset. We do not want to change anything. Okay, you do not want to change anything. Okay, so let's assume this is our momentum RSI. By the way, this is momentum reading. So when you're dealing with divergence, you're basically using momentum to your advantage to see or have a clear future view that this thing is going to lose power and we might be able to have a trend reversal and start dropping. Okay, so when the market is making higher highs and the RSI, I'm going to draw the RSI because you cannot just spot divergence here. We're going to spot it on the chart later when we have a clear chart. Okay, so when we have when you have this is price, this is price action, and let's put this as our RSI. Okay, the indicator that we're using. Okay, so when price is making higher highs and the RSI, which is our indicator, is moving, let's assume it's making its own movement like that. I'm going to change this to blue. Okay, and the market is making by the way, this is momentum. We have momentum moving in the same direction. By the way, when you're dealing with with divergence, you need to put much concentration on what the RSI is doing. Okay, that's where your concentration needs to lie on. Okay, so when price is having higher highs and the stochastic starts making lower highs, does that make sense? Lower lows, lower highs, lower lows. Yeah, and when the RSI starts making lower lows, which are these. Okay, these are our lower lows. Let me just add up that. Okay, so when you have price doing that and the RSI doing the opposite thing at that particular time, how do you know? How do we read this? We use the cursor. Okay, we use our plus thing to see the actual direction of that particular particular price and RSI current price thing. Okay, yeah, I apologize for that. Okay, so you use this we use this crosshair to read the current price of the RSI and the price action as well. Okay, so but I want you to read me clear on this. When price is making higher highs and the RSI is making lower highs, okay, what you need to do once you just spot this, once you just spot this in the market, what needs to come in your head is that this is regular divergence. Okay, this is regular divergence and it's giving you a signal of price starting to drop. Okay, That's what you need to do. There's nothing more, there's nothing less here. Okay, when you spot price making higher highs and you spot the RSI doing the opposite of what price is supposed to be doing, starting from here, it was following up price action. Okay, it was following up price action pretty good, and right at this moment where momentum lost its strength to the upside, the RSI started giving weak signals. Hence, once you spot this, you see your price is getting weakened. What do? You start looking for a sell right there and then. Okay, so this is regular divergence in an uptrend. Okay, let's now look at regular divergence in a downtrend. Okay, let's look at regular divergence in a downtrend. So you have price moving from the upside to the downside. I think let me just restart this whole thing. We have price moving from the uptrend to the downtrend. Okay, and then that's it. This is a downtrend looking for a potential low risk buy. Okay, and we have our stochastic RSI, our relative strength index, spotting a buy. I don't know if that makes sense, that graph that I've been drawing. Okay, I want to make sure this is as clear as possible. Okay, so we have regular divergence in the downtrend part. Okay, we have the RSI and your price action right there. So what you need, your concentration needs to be on the lows. Okay, where price is making its bounce from, which is support. Where is price making your support? It's right there. Okay, and where is the stochastic making its support? It's right there. Okay, so once you spot your lows, okay, the most important area now is for you to see what the RSI is doing. Okay, as you can see from the start, the stochastic and price were corresponding. Okay, they are agreeing. Okay, we're dropping. Then right here at its low, here I'm supposed to add something. Okay, here at its low, when price was making its lower low, okay, then the stochastic started making higher lows. These are higher lows because if you look at the distance between this low and that is not corresponding. They are not corresponding. Okay, it's like that. Let me give this scenario. It's like that. So the lines mostly in the downtrend with regular divergence, they are spotted to be doing that, and this and the RSI points to the upside. Once you spot this kind of thing, just know that you need to start looking for buys. Okay, how you might be having a question on how you know when to buy or when to sell when you're doing this. Then now the stochastic comes in play. Okay, but I'll head on to telling you how hidden divergence is before I show you how to trade divergence using the stochastic with a combination of the RSI and price as well. Okay, so when you're dealing with hidden divergence, it also happens in two scenarios. You have buys and sells. Okay, you have buys, you have both bullish momentum and bearish momentum. How do we trade hidden divergence in a bullish momentum area or in a bearish momentum area? So I'll start with the bearish area, okay, to give us a bullish movement to the upside. Okay, so we start as usual. Price is dropping. I think I need to find the chalk thing. Price is dropping from here, dropping down. I'll just draw 2, and you have another one here. That's price. We separate price with the RSI. What the RSI will be doing, you have that. So this is like the opposite of what the regular divergence is supposed to be doing. Okay, in this scenario, price doesn't make funny move. The RSI doesn't make funny movements. What makes funny movements is price. Okay, let's do this. Okay, let's put up this. Now, as you can see, we'll spot our lows. We have this low and we have this low as well. I'll use the first low, and we have this low. Price, what is the RSI doing? The RSI is making lower lows. Okay, and what is price doing? Price is making higher lows. Okay, it becomes like the opposite. Price makes higher lows and the RSI makes lower lows. That's the secret. It's like a V type. Okay, once you spot this, you use your cursor. We're going to have practical examples. You use your cursor. When you spot something like this, price doing this, just know that, okay, what we are having here is hidden divergence, and once you spot hidden divergence, it becomes a trend continuation to the upside. Okay, that's bullish hidden divergence. Okay, it's bullish hidden divergence. This is the easiest way to spot it, and it's the easiest explanation you ever get when you're dealing with this stuff. Okay, so that's hidden divergence. Let's look at it in the scenario of buys. Okay, so we have high momentum movement. Let's start. When you're having an uptrend, when price is moving in an uptrend. Okay, I'm going to be quick on this one. That's that. We have the RSI trying to make funny movements there. Okay, all right, so this the downside part is the RSI. So with the RSI, it becomes a whole different thing. I forgot to add this one. This one has to be low, lower low, lower high, going to a lower low. Okay, I'll draw it from, I don't want to complicate things. Okay, I'll just add it here. Okay, I think I'll keep going until I get a proper. Now the problem is that I don't want to crowd this whole thing. We have high, low, that. Okay, that should make sense now. Okay, so we have lower highs, and we have higher highs. What's our V pointing at? That and this. It's like they are now intertwining like that. Okay, so once you are having an uptrend and you spot price making lower highs and the RSI making higher highs, what you have seen is bullish. We say that's bullish, that's no hidden bearish divergence. I think that makes sense. Okay, hidden bearish divergence. Why do we say it's bearish divergence? Because we are going to have a concentration momentum going to the downside. Okay, so those are the two types of divergences that we have, and we've looked at them in both scenarios that they can be spotted from, which is the uptrend and downtrend. Okay, so now let's head into how to trade divergence. Okay, how to trade them using the stochastic. Okay, we've known how to spot divergence. We've known how to spot divergence using the RSI and price. Now let's try to spot that and use the stochastic as well. So we go on insert, if you're using a computer, indicators, oscillator. First of all, you get your RSI. Okay, I'm going to change the color of this one because I want it to be a dark blue to be able to spot. You have those levels, the 70 and the 30. You can just leave them the way they are. Okay, and let's insert. First of all, I'll not insert the stochastic. What you need to understand before we insert the stochastic is that we need to spot divergence first of all. Okay, let's spot divergence in gold. Okay, we are going to spot divergence in gold. First of all, what do we look at? This is an uptrend. Okay, that's an uptrend, and we are looking at highs. We want to see if the RSI is obeying that. Let's see what's this. I see something. We have that. We use our cursor. We have that and that. Okay, let's try to this. Okay, this is pretty confusing. I think there's divergence here, but it's pretty confusing. Okay, let me just try to. We have divergence here. Okay, yeah, we have divergence, and I'm trying to. Is this? No, it's not. It's not. My bad. It's not, guys. It's not. We would have said we have spotted regular divergence if this thing was actually pointing to the downside, but it's not. It's not. So what do? We continue looking for that. Let it be downtrend. I have this. Price is obeying. Why was price obeying? Oh, okay. This looks funny. Lower low. Okay, one and the something. Okay. This is good, by the way. It doesn't do much trending.
Incoming mail.
There's no much trending. Okay, I think this one was spotted. Okay, I think this is proper. I'm going to give one example because this eats up time. It's eating up a lot of time. Okay. More of that. And this here. Okay, that's valid now. Yes, should be valid. We have picked up this candle. This candle. Yeah, it's valid. So we have spotted regular bearish divergence. All right, this is regular bearish divergence, giving us an indication of price having a drop. Okay, and as you can see right there, price started dropping, but we are insinuating that we are assuming that this is the current price and you have spotted this kind of divergence. It's pretty hard spotting this, but you get a hang of it once you look at the lesson pretty much into it. Okay, so we have our regular divergence. Now we get our stochastic to find a sell right here, and then you cannot just sell. Okay, it's not valid. You cannot just sell. You need to have something you use extra as your leverage of that particular buy or sell. Stochastic oscillator, and I'm putting this as solid. You make sure everything is on reset. Solid line, that, and red. Okay, as you can see, what I want you to take a look at on this one is this. Okay, you have the highs. What is price is making the what is making the low. Okay, higher highs, this is making the lower highs, by the way. So we have price making the higher high. The stochastics, they are making the lower highs. Okay, you can easily spot, you draw that in the oscillator as well. You can draw it, it will still bring out the same thing. But now, how do we trade it? How do we know that this thing is going to drop right there and then? Okay, so let's squeeze this in. The use of that is done. It's pretty much easy spotting divergence with the RSI. That's why I brought it up. But now I want you to take a look at this. You have two lines, the red and green line. Okay, you have the red and green line. So these two lines are what's going to help you find a trade when trading divergence. When you have a cross after spotting divergence, that's your execution area. Okay, when you find a cross right after spotting divergence, that's your area of sale. As you can see right here, it was just too straight. You had if you are trading at this moment, you saw this bullish momentum and you spotted divergence just right after spotting it. It was an execution. Okay, you spot and execute, spot and sell. This was your sell zone. Okay, that was your sell zone. You sold, waited for price to start making its own thing. Where do you take your profit? You take your profits right after price makes another cross dropping to the downside. Okay, that's how you spot, that's how you trade divergence. Okay, straightforward, everything full intact, nothing left, nothing forgotten. Okay, these are the most things. What you need to understand is that even if I'm not too fancy with these charts showing you this, what I'm teaching you is what's going to make you money. Okay, if you are using this for your own education, by the way. Okay, what I'm teaching you is that I'm guiding you just in case you're trading with these indicators. You should at least, if they are not going to make you money, you should at least use them right. Okay, I use them right. That was your sales when you sold, and look at how price dropped. We can still spot more divergences from time to time. We'll still find them, and you see how price will go up because it gives you the momentum. You're looking at momentum. Momentum doesn't lie. It's in rare cases you find momentum glitching. Okay, as you can see, even here you have that and this. You cannot say that was straight because yeah, that was an upward thing. And if we use our, is that right? Or it's here, it's still below the level of 20. That's divergence. Okay, spotted. Once spotted, you wait for price to make a cross. It made a cross right here. Okay, this is where price made a cross from. If you wanted, you'd have executed price right at this moment, but if you waited for price to make an upward thing, because when you're dealing with indicators, they lag a little bit, so you might have spotted this cross right here, upper. Once you spotted the cross, you get your profits from here. But this thing flew. Okay, it flew up to that end. That was about 300 pips in trading. When you're dealing with gold, it's a lot of pips. All right, so thank you very much for watching to the end. If you followed up, if you liked the video, if there's anything missing, hit me up. If there's anything you're having problems with, comment that thing. I'll guide you through and make sure that I have your queries looked upon, because this channel is for you guys and I'm just trying to help. That's the whole thing. Thank you for watching. Make sure you subscribe, like, and comment. Very, very important. Commenting is very, very important. Thank you.